Hey, good morning. Welcome to another lecture in personal finance. I'm Jim Munchback, and I'll be the facilitator. We'll get started in just a minute. This week, we're going to talk about the blueprint for financial success, which is the assignment for week 12. So let me get the Zoom meeting going. I'm not totally sure if we'll have anyone on the Zoom meeting, but we will find out. I have had so many changes in Zoom. Actually, lots of changes with Apple, so many updates. Uh, and so I'm hoping this Zoom works. It's had a few changes as well, updates, and so I'm getting started a little late. We'll see if we have any folks in. Hey, we do. We have some folks. Hey, Victoria, good to see you. Glad this is working. I hope it's working. I'm hoping you can hear me. Um, Let me check to make sure my microphone is set up correctly. If you could chat in and tell me, Victoria, if you can hear me. Let's see. Okay, cool. Thank you very much. I appreciate it. Okay, so I'm going to get started. We'll get started in just a few minutes. We're going to do the blueprint for financial success. And this is an optional assignment. So I'm going to show you in the link to the video. Actually, I forgot to put the link to this post in the video, but I'll go back and do that when I add this video to the playlist. So just so you know, the playlist, let me just pop that up for a minute. Our playlist is right there. So we'll get started in just a minute, but I did want to mention a couple of things we're going to go over in this episode, in this lecture. I'm going to cover the blueprint assignment, which is actually the blueprint assignment is actually optional. So if you've gotten this far in the semester, congratulations, we're this close to being done. The only assignment left after this week's assignment is the capstone assignment. So this week is the blueprint assignment, and it's an assignment I've been playing with for a few semesters, and I'm not sure it's hit its finishing touches. So it changes every semester, but it is optional. And here's how that works: you need 950 points to get an A at the Bauer College. There is no such thing as an A plus, and in this course, you need 950 points to earn an A. So if you check your points in Canvas, and if you add the 200 points that you should get, that's the most you can get on the capstone assignment. The capstone assignment does not allow any extra points for early submissions. So just so you know that. But that's 200 points. If you've gotten good grades all the way up until now with no deductions, then you should get full 200 points on your capstone assignment. If you have had some deductions, then I would encourage you definitely to take a closer look at those assignments and make adjustments in your right capital plan before you do the capstone assignment, so that you can be sure that you've got everything updated, so that when you do your capstone assignment and you put it all together, when I review it, I won't see any of those big mistakes. One big mistake that we've talked about over and over is if your ending plan has a massive amount of money, then you're going to have, let me just go here real quick. I'm going to show you a plan that I'm going to review in a few minutes. So, spoiler alert, this is a student's plan in Right Capital. She gave me permission to share it. I think I forgot the name of the student. I'm going to try not to tell you the name of the student, but it's probably there. But she did give me permission. If it's a he, I'm very sorry. I will find out. But anyway, thank you. Is the way that you can request a tutorial for your capstone. If you're struggling with your capstone, this is the way to get uh, this is the way to get help. So this is a PDF that this student sent in. It does everything I've asked you to do if you want a tutorial. So I'm going to do a tutorial today, a short one, to help this student identify why they have so much money in their plan. Because as you know from last week's class collaboration, or the week before maybe, how do you get a 50-point deduction in your capstone assignment? It's by having a massive amount of money and having no clue why. So you have to kind of convince me that you have a big amount of ending value in your plan, and you know why. You figured out why. It doesn't mean you have to fix it or change it, but you have to be able to explain it. Hopefully you can fix it, but some of your plans, if it's over $5 million of ending value, you just need to explain it. Now, in this case, it's 77 million, and many students, believe it or not, turn in assignments with $100 billion of excess at the end of their plan without even commenting that that's a massive number. So that's what I'm trying to avoid. If you're submitting a capstone assignment with a huge number, and you don't even know why, then you should take another look because you missed something. And that's kind of the point of this course and why we use Right Capital. I don't expect you to be an expert, but I do expect you to get to know your plan sufficiently to be able to identify, A, this is a huge amount of money, and B, this is why it's a huge amount of money. So that happens to be both in the retirement. So if you look at your Right Capital, you'll see I'm in retirement, I'm in analysis. This is one of the numbers I'll be looking for when I review your capstone assignment. The other thing I'm going to be looking for, remember the debt strategies we worked on in Credit Crush. To get there, you click on these three dots. Oh, there's Anil, and I'm sorry, Anil, I think you're a female, but I don't know. But if you're a man, I'm very sorry. But I thank you very much for turning in this. So this is the debt. When I go to action items, I'm going to, instead of set priority for all debt, I'm going to say highest to lowest interest rate. And then I have to go down and hit the refresh. And when I hit that number, I have no idea what's going to show up. So that's a very reasonable number right there. So that would, if you turn this in your capstone assignment with $44,000 of savings after you changed your strategy, your debt payment strategy, I wouldn't even look twice. I would move on and check the next element of your capstone. But in this case, we do have retirement. So at the end of this lesson, I'm going to go back and I'm going to see if I can figure out why it's so high. But even if I don't, I'll be able to, well, I should be able to, hopefully I'll be able to figure out why, and stick around and you'll see if I know what I'm doing in Right Capital. But at any rate, what you will learn if you watch me try to figure out this plan and why it has so much money left, you will at least get to see how I review the plan. Therefore, you will get some insights into how you can review your plan, because that's all I'm going to do is start looking around. So that's what's coming. And let's see. There we go. This is the link. I'm going to pop that into the video. I didn't do that. I don't know that anybody cares, but if you're watching live on YouTube or Facebook, it might be good to have this. But it's the same. It's pretty much the same thing that's in your Canvas. So when you look at your assignment, you'll see basically the same thing. So no worries. I just do want to highlight this. This is a tick. It's an illustration that my friend Taylor Springle drew when I wrote my book, Make Your Money Count. And this is a tick because it just so happened when I make a presentation, when I'm doing financial planning with folks, there's a method, there's a like a scope and sequence, and typically most people, uh, the big idea in financial planning is financial freedom or financial independence. And so this, when I wrote the book, and I used the metaphor of a blueprint, which is what you will read. By the way, you will be reading. This is the chapter that you will need to read, and that's posted both in. It'll be in this post, but it's also posted in Money Study Group. So hopefully you may have already read it, but it's just a whole chapter from my book, and it explains how the blueprint works. And so I want you to read that so you have some context. That's part of your assignment, is to read that chapter in my book. And in that chapter I talk about this process, and it's kind of the 7 elements of financial planning. Free Tick is the 7 elements of financial planning: financial independence, risk management or insurance, estate planning, which we didn't really cover a lot. We didn't cover it all. So if you don't know anything about estate planning as a result of taking this course, that's okay. Looks like my video has frozen. Can you still hear me, Victoria? Does my head move when I move my head, or is it frozen? Okay, cool. Well, hopefully my phone will come back to life. I don't know why it did that. Oh, look at that. It comes back to life with vigor. Okay. And now it's dead again. So, you know what? I think I might change my camera here real quick. Give me a second. See if this works. Sorry about that. Okay, that's just a different camera. It's kind of ugly, but let me see. I think I need to switch this. That. Sorry. Okay. Uh, I do not know what's going on with with this program. There have been so many updates, and so many updates in the Mac world, and this software. Everything's getting updated, and that's probably why my phone's not working. But anyway, back to this. Free Tick. I was just going to go over the elements of financial planning, but there they are listed. And again, it starts with financial independence. Financial independence is typically what we're aiming for when we do a financial plan. Folks want to know, what is the best way for me to achieve my goals? And one of the big fundamental goals, at least for me and most people I work with, is to have financial independence, like, or you could call it financial freedom. Some people call it retirement planning, but I'll tell you, that's a terrible term, I think. I'm 62 years old, and I don't really ever want to retire. I know there will come a day when I won't be able to work at the same level I'm working now, and I will need to retire, but that's not like a goal. And I don't know very well. Some people, that's their goal, is just to retire, to stop working, to go camping, to go fishing, and that's awesome. But I don't want to stop working. I want to do all those things, but I want to keep working at the pace I want to work. And what that means is I have to have sufficient financial independence to be able to say no to projects that I would have to say yes to when I was younger because I wanted to build wealth. I needed the money, and yada, yada, yada. So financial independence is the first element in this thing called Free Tick. And again, this is just to help you remember the 7 elements of financial planning. So I'm going to change this real quick to, just so you know, we're publishing this to this semester's playlist at uhplaylist.com. And now I'm going to get rid of that. And I'm going to go here and do that. So there we go. So the blueprint is based on these 7 elements. There they are. And I'm asking you to share what you learned this semester. That's part of this assignment. And that's really the first part of the assignment. You're going to write an article just like you do every week, but this article is going to be around the topics that are outlined in the assignment, which are related to the blueprint. So you're going to read the chapter, you're going to get to know what the blueprint is. Again, this is an optional assignment. If you have close to two, if you have, so just look at your points in Canvas and decide whether or not it's worth it to you to do this assignment. If you're at all concerned that you may not get an A, do the assignment. But if you're really feeling good about how many points you have, you've gotten 60 points every assignment because you turned in your assignments early, you can be confident that you're going to get a 200-point score on the capstone. And you can be confident because you've already achieved the class collaboration stuff. You can be confident that you're going to get 200 points on the class collaboration, which is worth 200 points for class participation. So I don't want you to, you do not need to do this assignment if you're in that situation where you've got all these points. That was my goal starting out. That's why we do the early assignments. There's couple reasons really. The first reason is we do extra points for early assignments because I want you, every student who takes this course, I want you to be in a position at the end of the semester where you get to choose. You can basically blow off this class for the rest of the semester after you do your capstone. The capstone is going to be easy for you if you've gotten a lot of points already. Close, if you calculate 950, including the 400 points you're going to get for the capstone and the class collaboration, and you're at 950, you do not need to do this assignment. You can go on and work on the courses that require more attention. They're more intense. That's fine. That was my goal. The other goal is, and I got an email from a student just this morning who was asking for an extension, and I just don't give extensions. So if you send me an email in this course asking for an extension because you lost your homework or your dog ate your MacBook or you're sick or you're out of town or your car broke or your Wi-Fi went down, it doesn't really, the bottom line is, unless it's something that affects the whole group, my answer is we just don't do extensions. You can do the assignment, get 1 point, but all semester long I've been begging you to do the early assignment so that if you find yourself in a situation where you're sick or you're not able to do the assignment for whatever reason, you can easily make up for it by turning your assignments in early. So that's that. So this assignment's spelled out in your in Canvas. So you're going to write that article. That's just, I love reading those articles. What did you learn this semester? Basically, that's what I'm asking you to write the article about. I gave you some structure for what I'm looking for, but I'm really interested in just what did you learn and what are you going to do with what you learned in the context of your financial future? That's really what I'm looking for. So that's that. And then the next section, I guess I call it show your work. So I do want a list of what are you going to do differently. That's in the assignment. But this is where we get to the spending tracker. And the spending tracker is, let me see if I can do a little, hey, my camera's back. I hope it stays back. We'll see. But this is the spending assignment. So I told you early on when we did your, I'm back on this camera. In the early part of the semester, I asked you to select a spending tracker. And I told you that you could pick anything. Most folks either choose mint.com or they choose the app from their bank. And so you were supposed to do that. Some of you chose Excel. And I warned you, if you do Excel, you're going to find yourself in a situation where you're not going to have an automated tool working for you to capture every transaction throughout the semester. And when I grade this assignment, that's what I'm looking for. If you don't have your transactions, you will get a big deduction. You'll get a 20-point deduction, a 20-point deduction, a 20-point deduction. if you don't have your data. If you used an app like your bank app or mint.com, it's all going to be there. I'm not going to really read it. It's not for me, it's for you. But I am holding you accountable for making sure you captured your spending data for this semester. And that's something I told you about earlier on in the semester. So you're gonna do that. You're gonna just grab that data from whatever app you used. If you used Excel, I just go through this every semester. Students who use Excel, very, very, very few of them actually capture all their transactions because it's a manual process. So it's kind of like saving your receipts. Good luck with that. It's so much better if you use a tool that's connected to your debit card or your credit card or whatever it is that you use when you spend money. Then it captures everything. And that's the really beautiful part about this assignment. If you are able to see that, then you can actually create a graph with categories for your spending that gives you some insight about where you're spending money. And that's the second part of this assignment, is to um, grab those uh, the categories, create the categories. I can't remember which camera I'm supposed to look at, sorry. So that's the graph. That was the second part of this section of the assignment. So it's got three parts: your data, graphs showing the categories, and then I just want you to share with me, what did you learn about your spending? When you see that graph or bar chart or whatever you create, you're going to start to see some trends, some patterns. And so I want to know, what do you see? How do you feel about that? What are you going to do about that? How does that help? Remember, the first law of personal finance is the law of spending and saving. Spend less than you earn so you can save more for what matters most. That's a huge part of this course. It's a huge part of your financial future. So that's why we do this assignment. So we're looking for the spending patterns, and just want you to give me some clarification about what you learned about yourself this semester in terms of this assignment. Okay, so I'm going to move on now to, it is 10:22. I'm going to jump into, let me go here and go here. And let me get rid of this. Okay, now I am looking at the assignment right here, which is pretty much done. Now I'm going to jump on over here. And this is, again, okay, it's time to do this review, this capstone review. So thank you to the student who sent this. This is a great model for you if any of you need help. This week, we're going to do the blueprint assignment, and I believe starting today, you should have access to your capstone assignment. So let me tell you just a minute about the capstone assignment. It's a 2-week, so you have 2 weeks to do it. The sooner you do your capstone assignment, the sooner I will check it off, give you a score, and you'll be then at that point, once I check off your capstone assignment, then I will go ahead and give you your class collaboration points. So if you're eager to see what your final score is, then get your capstone assignment done. That's your incentive to do the capstone assignment early so that you can see how many points you have, because I'm going to post the grade to your capstone, and then I'm going to turn right around while I'm in Canvas, and I'm going to pop in your points for class collaboration, so you will know what your final grade is as soon as you do your capstone. If you're having trouble, if you're not sure, now please don't do this. Don't do this if you're sure and you're confident and you just want a second look. I don't really, but if you're struggling and you need help and you're really far off on these numbers and you can't figure it out, and you tried and you reached out to GroupMe, you're welcome to put this together, this PDF, just like this. This is what the student did, took screenshots from their plan and write capital and gave me enough detail so that I know how to help them fix the problem. That's what I'm going to try to do right now. That's what I'll do for you if you submit a request to do a tutorial for the capstone assignment. But that's only going to be open for this coming week. So if you take the whole 2 weeks and you decide you're just going to wait, then you submit the capstone request, the tutorial request. I'm not committing to get to that between for the last week. I'll be wrapping some things up. So 2 weeks for the capstone assignment, 2 weeks. Get it done as soon as you can so you get the points. And if you want to do a capstone tutorial, you have this coming week to get that together and send it to me. And that, by the way, is the class collaboration for this week's assignment. It's the capstone tutorial. You need to tell me, have a conversation. If I want help with my capstone, if you're going to do the blueprint assignment, then you need to include this class collaboration. So here we go. It's 10:25 a.m. That means it's about 25 minutes into this video, and I'm explaining what the class collaboration is for this week's assignment. It is the capstone tutorial request. What is it? How do you submit it? And when can you submit it? Just tell me those 3 things about the capstone tutorial. What is it? How do you submit it? And when? What's the window for you being able to submit the capstone assignment? I want everybody to know that. So that's the class collaboration for this week. If you are doing this assignment, you will need to do the class collaboration, which is the capstone tutorial. What is it? How do you submit it? And when can you submit it for this semester? It is the fall 2024 semester. Okay, so back to, this is basic questions, she says, and I'm so sorry if I'm just not familiar with your name, and I wish I did a little research before I jumped into this. I just saved it for today, so I apologize if I'm wrong, but the questions that you're asking are pretty common. You've got, just to answer one of your questions on the tax allocation, it looks like you have it set up correctly. That was one of your questions. You've got a 401k with 230 grand in it. That looks like that's your investment. That's how much you've told Right Capital that you have in that account. That's great. You have an IRA. The only thing that's kind of weird here is you've got 2 401ks. So maybe, well, I'm not sure it's 2 401ks. Yeah, it is 2 401ks. So you've got this 401k. It's tax-free Roth IRA. Okay, and you've got the tax-deferred IRA. Okay, you're good. Yeah. I'm assuming that you're putting your Roth IRA into your 401k. That's great. That's great. This is new, by the way. Used to be when you had a Roth IRA, it was a separate account. You couldn't do it in your 401k. And Right Capital has updated the platform. So that's why I was a little confused, because it says 401k, but then you have it listed clearly as a tax-free Roth. That's perfect. And that means you've got, in those 3 buckets, you've got 150. But really what you have in those 3 buckets is 150 plus 230. You see that? So that's a little much. Now, I see, and I'll get to it in a second, your comments about your actual age. And so you certainly could be projecting that you have this much in your 401k because you're assuming, you're pretending that you've been working for a long time and you've been contributing, and that's fine. But if you want to be accurate, I would suggest that you take another look at that, because you've got it's fine. It's not a problem. I just want to help you understand what's in your plan. So, in fact, I think this is actually perfect, because you should have a 401k plan, and to do the tax allocation assignment, you were supposed to set up at least 50 grand in the big blue bucket, which you did. That's the taxable account, which has no tax benefits, and that's an important account to have. You have the tax-free Roth IRA, 50 grand. That's perfect. And you have the tax-deferred IRA. That's a traditional IRA or rollover IRA. And as you will recall, those are the rollover IRA is the account that you use when you change jobs. So when you quit a company and you move on to a different company, you typically want to roll over your 401k into an IRA, an individual retirement arrangement. We all say IRA means individual retirement account, but technically it's an individual retirement arrangement. It's a tax deductible or rollover IRA. So you did perfect here. And then in addition to that, I did ask you to set up a 401k because we made the decision to make you 10 years older. And I told you I wanted you to do a little research and figure out how much you would have in your 401k, assuming you invested for 10 years and assuming that you took your asset allocation, what you learned about asset classes, and you became more aggressive. So this is all perfect, okay? It's perfect. I just wanted to answer your questions because you did. So this is my net worth when I want to retire at age 60. So that's good. We'll get into that. Right now, I'm just looking at the PDF. In a second here, I'm going to jump into the right capital plan. So now I'm in your plan. So give me just a second. I'm going to review the your questions on your request here. And let me see. Hold on just a second. I want to change something on my end if I can. Okay, hopefully that works. That camera over there is giving me grief. It's just a weird camera. So here were the questions, and this is important. Are the 3 accounts that I added correct from assignment 11? And the answer is yes, totally perfect. I'm going to look in your plan and make sure they're set up correctly. But based on what you just showed me, the screenshot, you did great. Should I be looking at 2043 at age 60 cash flow? Well, when you look at cash flow, you're looking at cash flow over the years. So that's a good question. But the answer is, as you'll see in a minute, we're looking at cash flow over the years starting now. Should I be, and do I want to lose? I do not want to lose 50 points, but I don't know how to make this amount come down on my retirement analysis. So just first of all, if you would have turned in your capstone assignment with this kind of information, I wouldn't give you a 50-point deduction. I want to know that you're thinking about it. And the problem is so many students, they just do the assignment. They don't even look at the number. They don't even know what the number is. They're not even aware they have money at the end of their plan. And they may have $1 billion, $100 billion, or 10 million, but they just don't even mention it. So that's what I'm trying to avoid. Okay. So you've done a great job here. I really appreciate you asking for help, but I want you to feel comfortable knowing that when you turn in an assignment, I want everybody to understand if you turn in your assignment with this kind of detail saying, I tried this, I tried that, I'm not sure, that's fine. I don't expect you to be an expert. I just want you to know that you have a lot of money left over. And so anyway, so you can't figure out what to do differently. I have not adjusted my income. It has stayed 150. Okay, so great. Now I'm just going to jump into your plan and I'm going to do a little work. Now I already showed you I'm going to the debt. You saw how I did that. I went to the 3 dots and we changed this highest to lowest. Already did that early in the lecture, but I just want to highlight again that that's fine. That's great. Now, I would, or I could, or I would suggest you jump in and look at your payments and look at what you're doing. And if you wanted to look at details, you could look at details for each of these different accounts. But that's not an issue with your case and your plan. That's not your question. And you're great. You're fine. So I'm going to move on and jump into retirement. And I'm just going to jump down here and I'm going to go to action items and blue bucket taxable. So these numbers right here, you're saving a lot. So you're saving right now, these savings, and I think I just figured out your problem, you're saving $230,000 in your 401k, and your blue bucket, you're putting 50 grand in there. So I'm just going to go like this. I'm going to go I'm going to zero that out because you should be showing that. I'll show you where you're going to show that, but come on, let me trying to get that. Okay, you see what I did? I just zeroed all that out. And now I've got to hit the refresh button. So now I hit the refresh button and let's see what happens. So it dropped it quite a bit on the proposed plan because that's what we're doing when we work down here. Monthly expenses, $5,000, pre-retirement living expenses. So you think you can make 100? I'm going to just check something real quick. I'm going to go to profile, income, and you're making 150. Whoop, you're making 150, and you have it increasing at 3% a year. And you say you're already receiving Social Security, which means you're telling Right Capital that you're receiving $1,200 a month for Social Security, which is not correct. So you should not be receiving Social Security. So let me see if I can save that. So that should make a difference too. Let me go back to retirement. And we should see a small deduction here, or a small reduction here, which we did. Now we're down to 21 million, so we're getting a little close. So now what I would do at this point is I'm looking here to see what you're doing. Let's see, what is your current allocation? I'm curious about your investment allocation. So you have it moderate, that's fine. So that's why this retirement is showing current allocation is moderate. So now let's just go in and check your cash flows. You see where I'm going to go? I'm just going to jump into cash flows and I'm going to see what I see what we see. And so here we have a map. We show expenses, living expenses. Now, I would say that your living expenses of 42 grand, pretty lean. If you're making 140 grand a year, you're probably spending a lot more than that. You're making 150 grand a year. You have taxes. So, I mean, that's one thing I would say is probably not correct, but let's look at summary. So this shows money coming in and money going out of your plan. I'm just curious. You've got income, no other inflows, total inflows. So look at that. You said you didn't change the income. It stays at 150. That's not true. Remember, when you go to profile and you say income, and you say, you say that your annual increase is 3% a year. That's pretty stellar. And so I'm going to go back to retirement and just show you that you're giving yourself quite a bit of, so I'm going to go back to cash flow. And this is what I want you to do. I want you to be comfortable enough in your plan to go and look around. So I'm going to go to summary, and it's a summary cash flow. It's just showing money coming in and money going out. And you're ending your year with quite a bit of cash. Every year you're accumulating more cash. So your income and your expenses are way off. You make way more money than you're spending or investing, so that's why. So look at those numbers. You're going to retire in 2024. That's what you're telling Right Capital, that you're going to retire then. And look at your expenses. They just keep going down. And when you retire, they go up a little bit. They go up because of healthcare and whatnot. The system's building that in. But what I would do if I were you, or if you're a student who wants to benefit from this analysis, here's what I would do. I would go, now, maybe you do have a job, a really good prospect for a job making 150 grand a year with a 3% increase. If you do, then if that's the case, I would suggest that you think about what your expenses are and be more realistic, because those are the two things that are going to change this. So if I say expenses, right now you're saying your monthly expenses are $32.50, and it looks like you're using a detailed worksheet. So now I'm just looking at your detailed worksheet, and I'm thinking, if I were your financial coach, I'd be thinking, okay, you're spending $30 a month on entertainment. You're boring. Um, Auto and transport, is that like insurance? Does it include a car pay? Well, you probably already have a car payment, maybe. I'm not sure if you do. Let me see now what expenses you have. I'm going to go over here to, where am I going to go? Net worth. I want to see what so you've got a card, you've got a loan, a car loan, 43. Let me look at that. Minimum payment, balance. So that all looks good. But those are the things you're going to want to look at: expenses and income. So if you just want to quickly fix this, I mean, maybe you do have 150 grand. Maybe that's the right number, but maybe it's more like 100. And when we save that, let's see what happens when we go to retirement. And again, I don't want to talk you out of 150 grand a year if that's really what you're making, but this gets you much closer if you're making 100 grand. And remember that the way that incomes are calculated in Right Capital, they're going to add that 3%, and that 3%, when we go to summary here, your income, even at 100,000, by the time you retire, you're basically making 170 grand. So those are the things I would work on if I were you. And if I were me and I were taking this course and I wanted to, I mean, I want you to learn as much as you can, but I want you to pass your capstone with no issues, and I don't want you to stress about it. So the way I would do it is, instead of stressing about it, I would just cut my pay. I would just reduce my pay in this case. Now, I didn't go back and read your assignment, and maybe I'll tell you a quick story and then I'm going to end. When I first did this assignment, when I started teaching this course, I had a student. I remember her face. I can't remember her name, but I remember all the details. She was great. She spoke 7 languages. And so she did this assignment, and the basic idea was do some research, figure out your dream job, and give us, do some research and build into your plan a reasonable amount for you to earn based on your research. So she did that, and she submitted her assignment, and she was in a situation very much like you. She had this massive amount of income. But in her case, it was $250,000 a year. And so when I graded her assignment, I said, that's too much. You need to go back and take another look. And I gave her like a 0. I always do that. I give you a 0 so you can go make changes, because I want to make sure you make the changes. If I give you a 10-point deduction, you might or might not. But anyway, I was like pushing back, asking for a redo. And she sends me an email and says, I'm sorry, Professor Munchback, I must have misunderstood, because I used the actual amount of income that I'm receiving now. So this was like my first semester teaching this course, and I realized after that interaction that I was pretty clueless, because this student, who was from Russia, spoke 7 languages. She was involved in an international group that did international things, and she was a very key player. And because of her communication skills and because of the unique opportunity that she was involved in, she made what I consider to be a tremendous amount of money for anyone at any age. But for a student, she was a college student, and she was 24 years old or 25. But I was so wrong when I pushed back on her assignment, and she made 250,000. So all I'm saying is, I could be very wrong about your income. If that's your income, then go with that. But you probably are going to spend a lot more money on stuff And if that's not the case, if you're not going to spend a lot more money on stuff and you're going to make that much money, then your plan is right on. You're going to have a lot of money when you retire. If you save, save, save. If you spend a little and save a lot, you will have these numbers. And when I go back to analysis, you know, just all I'm saying is explain that. Don't just submit it, because even if you have 6,485,000, that's not a ridiculous number at all. It's just over 5 million. And I randomly picked 5 million because there's got to be a number where you have to make a comment and say, there's something here. I want you to acknowledge how much money you have at the end of your plan. I want you to acknowledge how much money you're saving by using different debt strategies. Those two areas of your financial plan are how you can get a 50-point deduction. But in this case, you would not have gotten a deduction just by telling me what you told me in this tutorial request. So thank you very much for sending that in. Again, class collaboration for this week. I'm going to end the lecture here, and I'm going to say two things. One, I'm going to remind you this week's class collaboration is the capstone tutorial. What is it? How do you request it? And when can you request it for this semester? That's your class collaboration if you're doing this assignment for week 12, the blueprint assignment, which is optional. If you need the points, do it. If you don't need the points, don't bother. That's one. So number two is, this is it. This is how I'm going to end this lecture. We're at the end of the semester. So you only have one more assignment. Excuse me. You have your capstone assignment. You have 2 weeks to do that assignment. When you do that assignment, I will then grade it and add your class collaboration points. The sooner you do your capstone, the sooner you get your points. So that's what I wanted to say to end, as well as just thank you so much for your participation this semester. I hope we can stay connected. If you're not connected with me on LinkedIn, then let me just pop this in here because I want you to know that LinkedIn, it is my favorite social platform. It's if you're a student, I think it's a good place for you to have a presence. It's my favorite for a lot of reasons. I think it's kind of like Facebook for adults or Facebook for professionals, and it is my favorite place to interact with folks. And I think we are live streaming to LinkedIn right now. I hope we are. We're supposed to be. But you know how technology is. At any rate, thank you. It's been my pleasure to serve you, and I hope it doesn't end here. I hope when you have questions about real things in your real life related to your financial future, if you need someone to reach out to that you can trust to give you a good answer, an honest answer, most of the time the right answer, although there are sometimes more than one right answer, but it can be a little complicated. Sometimes it helps to have somebody with some experience to take your question and put it into a good, easy next step. And that's what it's all about, your next step. I hope after this semester, I hope after this assignment, you have some next steps in your life that will get you closer to where you want to be. At the beginning of the semester, I try to always ask the question, if you envision yourself 3 years down the road, 3 years down the road, think about it. Imagine what your life is 3 years from now. What has to happen in your life between now and then for you to feel good about the progress that you've made? I'm going to be speaking at a Wolf Center for Entrepreneurship a couple weeks, I guess, or a week. Anyway, that's what I'm going to be talking about. It's how do we end the year well? It's kind of the topic, the theme. And I'm going to be talking about that. Like if you could envision your life 3 years from now, what would have to happen in your life for you to feel really good about the progress that you've made? And if you can answer that question, if you'll spend a minute or two just thinking about that, and then think about the context of your financial life and the things that you're doing today and how you manage money, there should be some very clear things that you decide, I'm going to do this. I'm going to take this step. Because if you do that, if you make that choice today, that's the third law of personal finance, the law of purpose and commitment, the most important law of personal finance, in my opinion. If you miss the first law of spending and saving, you're just going to be in trouble. But if you get the first law and you don't get the third law, the law of purpose and contentment, you're going to miss out on a lot of beauty in your life. So I want you to think about that as we end. And I look forward to continuing to be a voice in your life, I hope. You can follow me on LinkedIn, YouTube, and so on. But thank you. If you have any questions, especially if you have questions about your capstone, you know what to do. So I will end there, and I'll be looking for your comments in the video and the YouTube, Facebook, and LinkedIn. So take care. I'll see you around.